I'm so glad that we're finally in a recession. All right, I'm not actually that excited about a recession. However, I do believe that a recession is so important to any economy, not just the US economy. It can be any economy in the entire world, and here's why. Number one, it basically redistributes what's happening in the economy, right? So ineffectively allocated assets get redistributed. So people who are over leveraged, those assets got redistributed, right? People who are investing into things like, for example, a housing bubble, people are buying and overpaying for houses, and they keep overpaying and overpaying and overpaying, and that keeps growing and growing and growing up to a certain point where it's no longer bearable for the market. And now so many people are priced out of purchasing real estate, right? So there's many first-time home buyers who currently cannot buy a house. So we need to see a decline in housing prices in order to allow them to take advantage of home ownership. They need to be able to buy a house. And so with the recession, it helps give them the opportunity to buy a house finally, because prices drop, right? Inventory stays the same, demand drops because we're in a recession. And now all of a sudden prices come back to more realistic figures where more people can take advantage of home ownership, which is very important in my opinion. There are also a couple other industries that tend to do really well when it comes time for a recession. So industries that deal with bankruptcies, right? Debt relief, that type of stuff. Any industry that's within that space, that's a potentially good investment. So maybe like a pawn shop, right? If you ever wanted to get into the pawning business, now's the time. Maybe buy a pawn shop, right? Or invest into a pawn shop. Maybe the pawnbroker down the street wants to sell you half of his company, and you get an equity stake in it. We see this effect on real estate. We see this effect on industries that deal with bankruptcies and that type of stuff. We now also see an effect in overall inflation, right? So if we are experiencing a recession, typically in a recession, what happens is unemployment rises. So what that means is that less people are employed. And so if less people are employed, that means less people can now afford to buy these products and services. So what that means is that companies will now have to lower the prices of their products and services. So that's another effect that a recession has. It actually helps us combat inflation, because if everybody's employed, if everybody has a job, yes, it's a strong economic indicator. However, it also means that inflation is rising, because companies know that, hey, we have almost everybody employed, everybody's making money, wages are rising, we're paying them more, but guess what? Now that means that our costs are higher. If I'm having to pay my employees 10, 20, 30% more, well, hey, maybe I should raise my prices. I need to still maintain profitability. If I was selling something for $1, I might start selling it for $1.10 or $1.20. And so we see this increase in prices that is affected by a strong economy, and that cannot go on forever. You can't outpace that. That always grows and grows and grows, and that would cause us to inflate to crazy levels. So a recession is kind of like, we see this bubble inflate. So our economy is like this bubble, and it just grows and grows and grows and grows and grows, and it can't just keep going. It has to deflate. So somebody has to pop that bubble, and that popping of the bubble is usually what we call a recession. So it's negative economic growth. So if we see the growth of an economy, if it goes up, we have a strong economy. If it goes down, that is a recession. Now, another thing that happens during a recession is the effect that a recession has on companies. So it causes companies to run more efficiently. So when we have a crazy, rapidly growing economy, we see rapid increases in income, right? So people are getting hired, and we have all these different things going on, all these different initiatives, all these different projects that we're taking on. During a recession, companies have to learn how to run more efficiently and run more lean. So there's a couple different things that have to happen. They have to decrease the price of their goods in order to move more of them, right? So if I just bought 10,000 units of something or 100,000 units of a certain product, and now all of a sudden we go into a recession, and I'm like, man, like when people had a lot of money, they were buying my products, but now I'm having trouble selling these products, right? So if I was in the shoes of that company and I was having trouble selling my products, I would have to lower the prices. Okay, well, let's do a 10% discount. Let's do a 20% discount. We need to move this inventory. We need to keep cash flow coming in because we have all these different expenses, right? So if we want to move inventory, then we're going to decrease our prices, which allows more people to tap into what's going on there, what we're selling, right? Even unemployed people are now like, hey, that's a pretty good deal. I kind of want some of that. So they're now buying this product as well. So employed people, unemployed people, newly unemployed people are now buying these products. So I'm reaching a much broader market. More people can buy my product. So during a recession, companies have to learn how to run more lean. They have to lower their prices, maybe temporarily, right? They also have to cut overhead expenses. So all those 15 people that they hired, they have to make sure that they're either doing something that is directly providing value for the company, or maybe they have to reduce their staff size, right? And unfortunately, that may mean that some people may become unemployed. However, companies have to learn how to do this efficiently, and they have to learn how to operate their company in such a way that it's lean enough to run through a recession. So even when they're not seeing record months, they're still able to maintain their operations, keep their lights on. Most importantly, I believe, is keep their employees employed. You have to make sure as business owners that they find specific roles for each employee to do so that it really truly does bring value to the company and allows it to keep growing and allows it to keep producing profitable months. So that's a very interesting facet of all of this, that, hey, recession might seem like a pretty bad thing, but actually it causes companies to run more lean. It helps us combat inflation. It has all these positive effects, right? We can sometimes reach a euphoric state in rapid market growth. So for example, there are houses in certain areas of the United States that were selling, hundreds of thousands of dollars above asking price. So somebody may ask 2 million for a house and they're selling for 2.5, or they're asking 1 million, they're selling for 1.3, 1.4, 1.5, because the market has reached a euphoric state. Euphoric state is never good for the market. There has to be some sort of stabilization. There has to be some sort of decline in the market that allows it to stabilize, that allows things to settle down, that allows our inflation to slow down a little bit, to come back to a normal level, and then we can resume market growth. But guess what? Every time a recession happens, it doesn't bring us all the way back down to zero. It brings us down to a certain level, and that now becomes our floor. So our previous recession, 2008, we had a very large recession. We saw a recession and it brought us back down to this floor. And now as the economy was growing, it grew from this level. It didn't go all the way down to zero. It grew from this level and it grew up. And now this recession may only bring us down to here. So now this is our new floor. We've reached a new level that we're not gonna go below. We're gonna reach this floor, we're gonna bounce off of this floor, and you know what that means? It means the economy is gonna go even higher than it was previously. So right now is actually one of the best times to buy, because a recession gives us optimal pricing for these assets, for these companies, for these different investments. And finally, one last benefit that I've done a lot of research on recessions, and one final benefit that I seem to see over and over and over again is that life expectancies are actually higher during recessions. And that is likely tied to unemployment. Now, I'm not saying that your job is causing you to live less. However, what I am saying is that there's a correlation between unemployment during a recession as well as a higher expectancy for life. Now, what it likely means is that people no longer have extra spending money to spend on alcohol, on tobacco, and all those different things that are hurting them. And unemployed people don't typically commute every day, so there's also probably a decrease in the amount of fatalities that happen on the road. So a couple different factors, but it is kind of interesting to note that, hey, a recession is not only good for the economy, it's also good for mankind. Anyways, I hope you guys found this super fascinating. Make sure to like, comment, subscribe, and I'll see you all in the next video.